Fed Chief Jerome Powell at Jackson Hole said that was an inevitability for rates to be cut in the US. We didn't require Jackson Hole to know that. There was already an 84% probability of a rate cut in the next FOMC meeting. The stock market on Friday in the US put in a fantastic performance, up 1.52%. Pretty much all sectors came up except for consumer defensive. But lurking in the shadows, there are still risks. The Nvidia earnings are the stock market's risk event after the Fed rally. And we also have talk of a stagnant job market. Not to mention, the president's pressure campaign on the Federal Reserve to cut rates is ticking off central bankers globally. What we saw on Friday was one of the biggest moves out. And we knew that structure around that 63.44 mark was really strong in the S&P 500. We were expecting a bounce up at least to the 64.30. We overshot that bounce quite substantially. Now, what typically happens when we get this kind of action in markets? I'll guide you through all the charts that you need to know. Let's run the numbers. Having been inside financial markets for nearly 4 decades, I put these songs together for you because your mindset is the key. These songs literally make you money. All you need to go is to listen to these songs. Go to @CTKS Method. Just pop into the playlist. This is just a channel that I started recently, and listen to those songs. You'll find them making you a ton of money. One particular song that would have helped you out when the markets went absolutely nuts was the Green Fire track. This is literally on fire. It will make you a fortune. I hope you had a great weekend, everyone. Okay, let's get back to the S&P 500. We knew that it was coming into fairly extreme structural support around that 63.44 mark. It did a bounce over where we had anticipated, the 64.30. This is a very good sign, but there's a big problem when you get an action like this in the market. I'm going to discuss what you need to know throughout this entire video, so please make sure that you watch until the end. The more you watch, the more money you will make, and the less stress you'll feel. Unfortunately, a lot of people do not know how financial markets work, so they're continuously mystified when price moves in different directions. One of the things to always understand, Bitcoin is the riskiest asset class in the world. It also has the best returns in the world as well. That volatility can go to the upside and just as quickly to the downside, so you need to know how to learn to sell, not just how to buy. The institutions want you to buy, leave the money there so that they can play with it. Traders do the opposite. We look after ourselves and not the institutions. Sorry, institutions, it's just the way it is. When you look at the S&P 500, the NASDAQ futures, the Russell 2000 futures, and the Dow futures, you can see that we had that big surge up on that rate cut optimism. Now, the rate cuts were already priced in the market. We already knew, well, professionals knew, we knew that the rate cuts were coming. But there's nothing like a fantastic narrative to just push positions into one direction or another. You'll notice that Bitcoin came up with the stock market, the S&P 500 futures. What about the NASDAQ futures? You can see that blue line came up. What about the Dow futures? Yes, sirree, it came up. What about the Russell futures? Yes, Russell dragged Bitcoin up. Now, what does this mean? Bitcoin is a proxy for risk on and risk off across all asset classes. Now, what does that mean? If risk is coming out of the market, we will see Bitcoin come down. When we look across global markets, it wasn't just Bitcoin that was coming up. China came up, Japan came up, the UK came up, Taiwan came up, Australia came up, everything was coming up. Why does this occur? There's a fundamental rule inside the markets. The US markets lead global markets in direction and momentum. And you can see the inverted VIX, it just spiked up like hell. It's probably not surprising that we're not seeing any US liquidity injections into the market. If we were to look purely on a retail perspective into the market to try to determine where things were going, we can see that we had that big push up. This is on a daily basis on Bitcoin. We can see that we had this big push up and we just couldn't make it. And we've come back to the 112.894 mark. A lot of retail traders and investors will think that this is support and strong support. Unfortunately, they are incorrect. The support is not there. But Ken, what about this tail? I'll explain that tail a little bit later. Retail and institutional views of the market are utterly different things. But we must know how retail looks at the market. Retail will be expecting, if we get a resumption above 119.671 will be the target, and if we break down from the 112.522, around that 105 will be the target there. This is called RIP analysis, or recent indicative price, and it does RIP your money. Managing your mindset is absolutely critical. It's vital because price is always moving in a wave. The green fire can burn you from either direction. You've got to be very aware of price moving in a wave. And a big shout out to everybody who commented on the previous video. You are absolutely awesome. Now we can see right at the moment when we look at the Bitcoin longs and the Bitcoin shorts, the Bitcoin longs were losing. This is very interesting. As price was coming up, the longs were saying, I'm getting less and less inclined to get into the market. The Bitcoin longs are starting to just ramp up, and this is also on a daily basis. And we can see the shorts aren't far behind them. The shorts are ramping up as well. The key to understand, inside the market around that 110.500 mark, there's quite a lot of structural layers that offer structural support, then a little bit lower at around that 108.757. If we start to lose that, the next area is 103.688. But if we start to repair here, the upward area for structural overhead resistance is that 118.300 level. We know exactly in advance where the algorithms, smart money, are going to come in and sell down price or support price. So this is a very powerful edge that we have inside the market. Of course, we need to do the cheat sheet. And well done to everybody who does so. Across the weekend, just in the past 24 hours inside the crypto market, there's been a whack of liquidations. The vast majority were long liquidations, but still some shorts were getting in there as well. The crypto market is currently down just slightly. We can see that Bitcoin is down 1.84%. Ethereum has been really strong, and Solana throughout the weekend has been strong as well. One of our CTKS global family was just wondering, how does M1 money supply and Bitcoin relate? You can see here that M1 is coming up, and these are different M1s throughout the entire world. You can see China's M1, the USA's M1. But what is N1? It's the narrowest definition of money. It includes physical cash, coins, demand deposits, checking accounts, and other liquid instruments. Now, what does it really mean? It's just like literally cash for today. A lot of people say the liquidity cycles drive the Bitcoin cycle, for example, in the stock market cycle. One thing that you can see inside the crypto cycle, and this is going back to 2021, the M1 liquidity was coming up, whereas the crypto market topped out. This was the China minor crisis in here, the second peak followed by capitulation. But you can notice that M1 was coming up. Technically, M1 should be coming up all the way with the cycle itself. Now, people talk about an offset. That's fair enough, but I wouldn't bank on it. You need consistently reliable signals. I'd like to thank you for being here and sharing this time together. In yesterday's video, or the last video, Rundle Ridge put out something on the cheat sheet. And the cheat sheet is a absolute superpower. Rundle Ridge was saying, I was watching some live traders who had been trading for decades longer than me, predicting where prices would go with indicators and story-based analysis, while setting up their charts with crazy candle patterns that sounded like food from a convenience store. If only they had the cheat sheet and the CTKS method, I could see that what they couldn't see. Wow, I felt like a professional. CTKS has given me so much incredible life-changing knowledge that would have taken decades to learn. Thank you, Rundle Ridge, for your very kind sharing, and so many people shared their comments on how the cheat sheet helps them out. Thank you, my friends. If you're new to the CTKS method, you'll find a ton of free things on ctksmethod.org. When we talk about the cheat sheet, what we're actually doing especially is talking about the service levels across row 1 through to row 7. We look at the cheat sheet through structural understanding, and it's very important to look structurally at the cheat sheet. From row 1 into row 2, this is our risk on or risk off. Row 3 are the major market indexes, which of course social media and the mainstream media talk about all the time. Row 5 through to row 7 is the crypto market. Now, crypto is very important to keep your eye on, especially if you're not trading or investing in it, because Bitcoin and Total throw signals that hit the major markets and reflect what risk-on and risk-off activities are actually occurring. And the powerful thing about crypto is 24/7. It never closes. It's cheap to get in and cheap to get out. And the volatility can make you a fortune. Looking into row 1, now when we see and talk about row 1, what we're specifically looking at is risk on coming into the market or risk on leaving the market. We look at the VIX, the US dollar currency index or the DXY, dollar yen, the 10-year yields, the 2-year yields, and oil. If we see the VIX cratering down, we anticipate Bitcoin and the stock market to be coming up. What drove the markets across the board was this big decrease in the VIX. And you saw the VIX come down, the DXY absolutely crater itself. The 10-year come down hard. The 2-year come down hard. But oil didn't come down hard at all. Now we need to stack probabilities, which is exactly why we go through the cheat sheet. And these areas, they're called SCs. They're drawn around structure to give us an understanding of where confluence occurs. We knew that we were coming up to a fairly strong area of structural resistance inside the VIX. Now that meant that if we broke up and through this structural resistance, the VIX would go higher, but if it rejected, it could come down and come down relatively fast. But we would expect it to base around this 1454 area. We can see it went a little bit lower than that, but this is a gravitational well. Now, what do we expect in the next 24 hours? When you see the VIX coming up, it literally retraces up and down, up and down. This is what it's all about. So the VIX coming down like this, we would anticipate a retracement at least to this 1560 mark. Now, what is that going to do to Bitcoin and what is it going to do to the stock market? It's going to basically cause sell-offs across the board. Now, a lot of people wouldn't anticipate this. They would just anticipate the VIX go down and down and down all the way through the floor. But that is not how the system works. The markets are always going up, then down, up, then down. And you can already see dollar yen has come online in Asia, and this reflection of Bitcoin's pattern has emerged. Basically, Bitcoin came all the way up and all the way back down again, which points to the VIX actually coming back to the 1650 mark. It's kind of like this. If you have a VIX spike, that's going to push down crypto, but don't expect it to just naturally keep on going. expect retracements to the upside. It's also the other way. If you get a leg up, expect a retracement to the downside as well. This is the muscle that traders develop, and it's really critical for investors to have this skill as well. Please let me know in the comments, did you manage to book any profits through this move? If you book profits, you are an absolute legend. If you were inside the crypto market and you didn't book profits, you instead got burnt by green fire, please pop in the term green fire in the comments. Row 2 are junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. We can see that junk bonds absolutely partied, but just please be aware that junk bonds only shows an update to this chart when the US markets come alive. Throughout the Asian session, they're going to be sleeping and sleeping hard. What about the euro dollar? We see the euro dollar flipped up, and look at Bitcoin. It's starting to flip down. We expect negative price momentum inside the euro, also inside the Aussie dollar today. It's really good to keep your eyes on Bitcoin. It can give you a forward leading indicator on where price can go. Of course, you must understand where the structural levels are on Bitcoin, and we'll look at that in just a tick. We can see also that gold has come up to its fairly high levels of structural overhead resistance, literally at where it's right now. 3370. So we're getting confluences across the board that we could get pullbacks in gold, pullbacks in silver, pullbacks in the euro dollar, the Aussie dollar as well. Inside row 3, we're looking at the SPX, the S&P 500 index, the IXIC, which is the Nasdaq comp, the DJI, which is the Dow Jones, and the Russell 2000 futures. That's why the Russell is awake at the current time. Now, what we see here is just that big push up because the VIX absolutely cratered down. The VIX movement was equivalent to what was happening in January. Now, if you know the significance of January, please leave a comment and I'll talk about it tomorrow. We had literally a retracement on that green fire that happened inside of Bitcoin. Looking inside row 4, which is Apple, Microsoft, Strategy, Tesla, and Nvidia, we can see Tesla did really well out of that VIX cratering. And that's the important thing. It's the VIX cratering that pushed Tesla up. Not necessarily anything to do with Tesla, just to do with market intercorrelation and interconnection. We can see that Apple's push-up was nothing like Tesla's push-up, and Microsoft's push-up was pretty feeble. Nvidia earnings are coming out, and that's going to be a real deciding factor on the market. We can also see that Strategy followed Bitcoin up, as anticipated. Row 5 is the crypto market, and we can see that Bitcoin has pretty much done a terrible thing and retraced all its gains. Now, what does this actually mean? This particular price action swept all of those profitable positions that were caught up not only in the green fire, but were stacking all through this area if they were under leverage and put in stop losses. One thing that we can notice, Bitcoin was really weak, but look at Ethereum, it stayed up there. Like I was saying, across the weekend, ETH has been really strong. Total crypto market cap took a bit of a hit, but nothing like what we've seen in terms of Bitcoin's retracement. Now, what does this actually mean? It means that people are buying into the banana theory. What's the banana theory? It's basically Bitcoin goes up, but the alts really take off. And when the alts take off, they don't come back until they come back and they do terrible things like reduce by 80%. Hence, why you need to be able to buy as well as sell. We've seen the alt market hold on particularly well, but just remember, if this weakness in Bitcoin continues, the alts will catch on in a big way. And we are anticipating a degree of pullback in this session. Remember, the US markets have not opened. Looking into row 6, which is Litecoin, Bitcoin Cash, Binance Coin, and Ethereum Classic, we can see that when the VIX absolutely cratered inside row 1, it drove the main markets and crypto market up. The crypto market was retracing across the weekend. We got a bit of a blip up in Bitcoin and total, and that caused the alts to go nuts. But they've since retraced that specific gain. You can see it on, for example, Litecoin. You can see it on Bitcoin Cash. One thing that is a bit of a cause for celebration is the fact that BNB has retraced quite strongly. Now, what does this mean? This is just an alignment with what we talked about before. The alt market, well, for example, Bitcoin came down hard. The alt market came down far less. And you can see a lot of retail interest. Now, the definition of retail, unfortunately, is those who lose money. Not all the time, but just about 90% of the time. So this is not actually a signal that doesn't make sense. It does make a degree of sense. But when we look at these particular weaknesses across these charts, we're seeing weakness across the crypto market. Looking across to row 7, which is ADA, Cardano, Solana, Dogecoin, and XRP, we've seen that ADA was really strong across the weekend. We had a fantastic push up, and this was largely due to Bitcoin bouncing, and then it came down. Now, if we get continued weakness, that will expose ADA to weakness as well. Therefore, we must see what's happening inside and with Bitcoin from a structural perspective, and we'll look at that in just a tick. One of the things to note, Solana has also been really strong. Around the current price, which is 203.71, there's a lot of structure, and then just a little bit below the 200, around that 199, is a huge amount of structural support. If you're inside Dogecoin, the massive amount of structural support is down in this area. And if you were curious on XRP where the structure was, around, for example, that 294.18 mark and a little bit lower around the 286.50. That's quite good in terms of any XRP retracements. Inside the Coffee Club, and you can find the link in the description of this video, I put a bit of a thing, the Markets Game. Now, this is a song that Kate and I put together to help you to understand the market game. The market game is all about re-engineering your emotions to make you money. And you can listen to all of the songs when you check that out inside the link in the description. One of the things that I wanted to help you with is the understanding of how you can interpret the song and how you can put a little bit of a checklist together on what you need to do. And also the song is there and all the lyrics are in there as well. So please check that out. It's absolutely free of charge and you'll find it incredibly valuable. That's just one song. You will find that when you listen to all of the songs, it will completely set you up for profitability. Okay, let's look structurally at Bitcoin. We know that this big push up on the 23rd was caused because the VIX just cratering down. Why did that occur? Well, it was basically a political thing. Jerome Powell, interest rate cuts, which we already knew were happening anyway. I'm just mystified as to why people don't know what is happening inside the market. They just listen to stories, they don't look at the data, and they just think, oh, rate cuts are coming, when there's 0% probability of a rate cut. We've seen this all the time. And then they say, oh, I don't know if Powell will cut rates. We already know. Of course he will. We just monitor the probabilities, just like professionals do. Now, what was this thing? This was the sell-off at the close of the US markets. Why did this happen? Well, it's pretty straightforward from an institutional perspective. But Ken, the institutions don't trade on the weekend. They tell you that. It's not true. Can you pick up a burger at McDonald's on Sunday night? Yeah, of course you can. Well, the institutions are trading with a lot of money, and they don't want to lose it. Now, where did we see that the Bitcoin rally was not going to continue up? Right around this point. Now, why at that point? Because we generally always have a degree of consolidation, a pullback. On this pullback, we should have come back and tested at least this area. We didn't. It started to come down. So around this area, we already had a very good perspective, an idea that this particular rally that started down here was going to get faded. And this is why it's really important to watch all the videos all the way through. If you've got a specific chart that you're just trading and investing in, say it's XRP or Doge, make sure you watch the entire video. XRP and Doge are dependent on what Bitcoin do. Now, what happens if we get continued momentum to the downside? And that is the predominant probability today. Well, the alt market will come down. How much it comes down is dependent on a wide range of things, especially the structure within the alt itself. But one of the things to note, Bitcoin is currently $112,878. We've got structural support at that 112,617, structural support at the 112,060, and at the 111,200. That 111,200 caught that tail end. This has now become an intention spike. Remember, the US indexes went up like this, but they haven't had the opportunity to show any retracement. I'll give you an idea what I mean. The S&P 500, the Dow futures, the Nasdaq futures, and the Russell futures. We're getting a little bit of red at the current time, but Bitcoin is telling us the direction that the markets are most likely to go. Now, is this absolutely 100% guaranteed? Absolutely not. Nothing is 100% guaranteed. It's a stacked probability, and when we think about the VIX just cratering so much, having a bit of a retracement, even if it's a 30, 40%, 50% of that move retracement, is very fair. Only retail will say it's not fair. It needs to keep on going up. And that is exactly what the institutions are counting on. When I look into the market and I see behavior like this, I pay attention. I don't ignore it. And you shouldn't ignore it either. A lot of people will give you stories, the banana zone is coming, total 3 is breaking out, it's never looking back. You don't want to buy at the top, get burnt by green fire. And just remember, Bitcoin is weak. It's retraced its entirety of that big VIX move. It's been retraced. If that doesn't give you a warning sign, I don't know what will. Let's have a look at total crypto market cap. We saw the US close, all of this sell side activity, a bit of a no man's land, and now New Zealand has opened up. Tokyo, Shanghai, Hong Kong, Singapore, Australia, they're not open yet. They'll open in a number of hours. But just think about it like this. If you were opening up inside the stock market and your exposure to crypto was only ETF based, in other words, you don't trade on exchanges, not crypto exchanges, just stock market exchanges, you would see this weakness and you would say, oh my God, it's red, I need to sell. That's what people do. When it's red, they sell. When it's green, they buy. And they get cut to shreds profit-wise all the time. It's just so sad. That's why Kate and I put all of those songs together. If you listen to the songs while you're trading and investing, or just while you're riding a bike, which is what Ambassador L did, sent a video across. That was so cool. Thank you, my friend. You can listen to them anywhere. They will make you a ton of money. Now, let's pop the service indicator on so we can see around that 3.88 trillion. That's what actually caught this as a gravitational well. Now, what we need to do is to look up a little bit further and say, well, what could happen here if total crypto market cap keeps on coming down around this 3.8 trillion is on the cards? Now, that would retrace the entirety of that move. And Bitcoin has already done it. Now, what if things turn around and we start to find that we've got structural support here? This is where the trading skills come in, because we would look at it. If it is just going to respect this line, we would start to get in and start to look at a target around that 3.92. Now, why is this important? Because you need to look at Bitcoin, you need to look at total crypto market cap structurally, the cheat sheet from a directional perspective, and then look at your chart to make your decision. Typically what happens is retail comes in, and remember the definition of retail, it's a pretty ugly one. People who lose 90% of the time. They will give you 10% where you win just before they wipe you out. Please do not trade institutional stories. Just know where the structure is, what the structure is doing in relationship to structural passes and structural failures. There's a lot of information to know. You're playing in a very high-level league, so to speak. But just be like Rundle Ridge. Rundle Ridge knows. Because when you put in the effort and when you learn, you're going to get the edge. Don't get a retail edge, get an institutional edge. Let's look back into Bitcoin so that we can understand where the structural perspective is inside the market. You can see if we just maintain this 112,617 level, we find structural support and it starts to grind higher. That's a key for us to get into the market. If we get a structural failure here, and that's the more likely probability, we have to see what happens around that 112,000. The next area is 111,200. Now, why do we have so much structure inside the market? Because this structure will play out on your alts. And if you don't know what's happening in terms of your alts, in terms of Bitcoin, in terms of total crypto market cap, you're going to go retail and lose money. And that's not why we're here. If I come down to the 1 minute basis, you can see at the close of the market's US time, even though it was on the weekend, it doesn't make any difference because people are still there. People are trading. You can see how well and how effective these structural levels are on capturing price. We read them to the right. We already know where structural support is and structural resistance levels are. Remember, you can make a fortune. Now the question is, did I personally get caught in and lose on that retracement? I mentioned where I saw the market weakening, and that's where I sold. I was hoping that we were going to get a continuation in Bitcoin, but it didn't emerge, so I was out. What is my strategy for today? It's absolutely to look at CTKS cuts. If I understand which way the market is cutting, and in relationship, of course, to structure and the intercorrelation between charts, I'll step in and step out as required. What I'm anticipating is that the VIX just came down so tremendously. It must kick up to a degree. I'm waiting for that to be reflected inside the S&P 500 futures and all of the other futures, and waiting for Bitcoin and total crypto market cap to prove themselves. I hope this helps out. If you'd like to listen to those songs, and I really recommend it, there's so much wisdom in there. It's literally decades and decades of trading and investing experience that you can apply immediately. Just go into YouTube, make sure you put the @ and the CTKS method there. There are no videos on the home list, just go to the playlist and you can add this to your song list. And please check out the Markets Game song and lyrics on the Buy Me a Coffee area. This one is completely open to the public. There's no need to buy anything. It's just there to help you out. I'm going to be putting the lyrics in the Buy Me a Coffee area. And it won't be just the lyrics, it will be a bit of an understanding. It's like a little mini masterclass. I'll go through and I'll help you to understand what different things mean and give you checklists as well. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.